Hi guys, thanks for tuning into another episode of Nuggets News. Well, it's been a massive week. We've got so many macro news and crypto news headlines to get through. A little bit of housekeeping to start off with to keep you up to date with a few things that have been happening. So we do welcome nearly 1,000 new subscribers again this week. Fantastic to have you joining us on this journey. I do just want to remind everyone that we have decided to scrap ads on all our videos because of all the scams that are going around on YouTube. And that will cost us a fair bit in revenue, but all I ask in return is that you smash that like button, leave a comment, have a bit of fun with that if you like. If you can watch the full video, that helps the YouTube algorithm, because YouTube doesn't promote videos that don't have ads in them because it doesn't make YouTube money. So if you do all those things, it can help the algorithm and try and, counteract that is the thought process there. Big thanks to everyone that is contributing to our Gitcoin grant. For those of you that don't know what this is, I'll talk about it more in a separate video. But basically, if you donate $1, which is $1, the Treasury will actually match $25. And so 16 contributions so far. A big thanks to Alexander. He had a particularly generous contribution. And all the money we raise helps go into hire more junior researchers, to do more preparation for this video, to help you guys find the best projects as well. So you can donate to all the best projects in Ethereum over on the Gitcoin grants. I'll link that down below. I guess I just want to thank the community in general for all the support over the years. And one of my goals was reached this week. So I always wanted to be a guest on Real Vision. They've helped me so much over the years, and I thought if I could ever get to that point where I'm an educator and sharing thoughts and getting interviewed by Raul rather than the other way around, that's awesome. And we got there this week, I guess. So that will be out for the public in about 6 weeks, they've told me. But if you are a member, that is available. The link is there to watch in the group, or there's also a trial for Real Vision at the moment. I believe they're still running that for only $1 if you want to check out that video. For members, the member reports in the unit section are still there. We've changed the format of the 5FA. Now, some people were a little bit, confused by what's happening. We're still doing a report every week, and we're still going to actually bundle them together once we have 5 and put it out for you in the meantime. Look, we'll take your feedback on board. Some people aren't a fan of getting them one at a time, but I just want to let you know that these are far more detailed. So rather than having 2 pages on each coin that we cover, these are now 5 or 6 pages, a lot more in depth. So we're actually giving you almost, I think it was 3 times as much research overall. But look, we're open to your feedback, guys, so continue to let us know. And this is all part of our plans to integrate the new Nuggets News system and app and research so it's easier to find. So there's always a reason why we are doing those things. Okay, let's get into the local news. So this is the biggest money laundering case in Australia, $1.3 billion fine. It is nuts that this is all happening still after the Royal Commission. Now, even after all that, here we are in a situation where we've rolled back these responsible lending laws. Now, Commissioner Hayne was very, very specific about how bad the situation was. I tweeted this out about how we've got ourselves into this situation where everyone was pretty, in consensus that housing was overvalued, and we haven't had any wage growth since then. It's still severely unaffordable for the average Australian. We've got record household debt. That huge global study that we spoke about in our documentary nearly 2 years ago now, where Australia scored 10 out of 10 in every segment of fraud and money laundering in global property markets. We've had the fallout from the Royal Commission and all the recommendations and changes. None of them have been put forward now, and the ones that have been repealed. We're heading into a first recession, and yet we've decided to scrap responsible lending. So look, I know some people in the business are saying that this actually doesn't affect things too much. Now, I am going to talk to Chris Joy about that. He did a good article this week, so I want to have a bit of debate, because to me this just doesn't make any sense at all why we would want to scrap that responsible lending given what we know in the history and sort of what it led to. Now, the US banks have seen a huge spike in fraud as all these businesses and all this, the aid sort of flows. And if we are seeing this in other countries, and we already had that was just rife in Australia for people that were applying for mortgages and loans, what do you think is going to happen now that our treasurer has effectively told people that we need to get credit flowing again? And if the banks do get in trouble in the future, they can almost turn around and say, well, you told us to sort of, lend more and get credit flowing again. So I don't think that this is, it doesn't mean there's a crash coming next year, but I worry about, my son, the next generation, or even ourselves in a few years' time. This is all just kicking the can down the road. In Australia now, we've got this growing stockpile of zombie companies. We've decided to take on the US style laws in Australia to keep the businesses alive. And US style Chapter 11, the corporate bankruptcies for small businesses, these restructurings, and they're just trying to keep businesses alive that should be going bust in that business cycle. And we're going to get to all the news about how bad it's got to in the US, and Australia has chosen to go down that path as well. Now, I actually really like Paul Keating. I'm not for one side or the other in terms of the parties, but I do like how he kind of tells it how it is or speaks his mind. And he's accusing the RBA of not doing enough for Australia's economy. I'm not going to go into that in detail because I discussed that in a video the other night. But this situation that I discussed about the government and the central banks around the world basically, I guess, playing chicken with each other about who they want to go first, because neither of them want to have the last bullet in the chamber, and both of them want to be seen to be the most powerful and rescue if things go bad. So again, Chris Joy did an article about this. He tends to take the other side and be a contrarian on a lot of things. And he did agree to chat to me. So let's hope we get that one out soon. 400,000 Aussies could be faced to wait months for these job seeker payments. I think sometimes they just forget the politicians that are continuing to collect their paycheck, that's real people, and it's not outside their window. And it's, you don't see people that are now homeless or can't feed their kids or whatever it is. There's nothing wrong with getting this done ASAP and then, I guess, making those subtle changes rather than leaving it. And the more people that fall through the cracks, the more people and businesses that close, those things are harder, I guess, to recover. You guys know all the costs involved in moving and starting a business on the individual, and professional level. So Josh Frydenberg may well and truly be setting these goals, 6% Australian jobless threshold in recovery plan, but it's just, it's all talk and figures. It doesn't really help average Australians in the real world that need help right now. Now, I do want to talk a little bit about COVID. The reason that a lot of otherwise healthy Aussies can suffer these severe conditions. And one of the things that I've said to you from the beginning is that I'll be open-minded and data-driven, and we are now starting to get some of that data. And it's clear, one of the things that I spoke about this a few weeks ago, that I suspected it's going to have a genetic component that can explain why healthy people and some doctors are getting it, as well as the elderly. We know that anyone who's more fragile is more likely to get more sick from anything, really. But there's now some data showing us that certain genetic mutations and those proteins can affect how the virus does affect you. And the good news is that we do have some medications. Now, if it's the ones that I'm thinking of, they're horribly expensive, like $6,000 a dose off the top of my head. But I'll confirm that with you. But either way, I guess if we've got a treatment, hopefully everyone could start trying to make those or slightly altered versions and get the costs down. But more and more of these doctors now and the health professionals that have the same, I guess, thought process as me, we need to do safety first. But now we have more time and data and evidence, signing these open letters to health, to governments and whatever, and saying, it doesn't justify this. The thinking, I guess, at least on my behalf, those of you that have followed this whole journey, was go hard early. Complete lockdown for a month, get rid of it and go from there. Whereas here we are, 6 months later with unrealistic goals about reopening. It just does not justify what is now happening to things like mental health that were the concerns. And that's less of a concern in a 4-week shutdown. And now those, I guess, the benefits and the risks, I do think that has changed. So I wanted to be really open and honest with you guys. Whether it's investing or these types of situations, you've got to be open-minded and change when the evidence changes. All right, so Chinese container factories are still sold out until February. More evidence of these US container import strength. So there is a lot going on in these global supply chains at the moment. Maybe it's just because of how broken they were previously, and this is playing catch up or trying to get ahead because they're fearful of more tariffs or changes with the coming election. But there is a lot of shipping going on around the world at the moment, which is very, very interesting. At the same time, as we have food shortages. So I think a lot of the shipping is the commodities that I've been talking about. These trade wars and relationships that maybe suppliers as well as the importers of these goods are worried about what is going to happen and starting to stockpile. And that is something that we are now very clearly hearing, but also seeing evidence from the investors. So the S&P's hottest sector lately has been materials. A lot of people are making bets on this sector, trading like the technology stocks. And I did a deep dive into this the other night in the video about all the fundamentals and why I think that may be. So check that out if you like. But same again here in India, blocking all these roads and railways, protesting against these bills where governments are setting the prices and guaranteeing the prices and leaving them at the mercy of private buyers. Sorry. This is once again an example of governments trying to intervene in free markets, and it just never works out well. I've got a great story I want to tell you about some Indian, government programs that didn't work out in the past, but make sure you remind me to tell you that one another day. All right, so in terms of some of these Chinese companies, we know that they've got a huge wave of debt and they've issued bonds like a lot of the big US companies. But this is one of the largest property developers, 120 million, that is now on the brink of collapsing. Now here we can see the time that these are all due, the different maturities and who they are due to, the US, Hong Kong and the yuan bonds. And at the moment, Q4 2020, a lot here, and it's that it's coming time to pay the piper, and you can keep kicking the can down the road, but it doesn't really help things. Now obviously China can step in and save these like they have with the banks, but this is the problem. The US can do that too, Australia can do that too, but that's when it weakens your currencies and investors start to say, well, I don't want to invest in that bond because it's no good if I get paid back in this fiat money that's been printed twice as much of to cover all these debts of these failing companies. And all of a sudden a bond and a currency doesn't look safe at all comparatively to even a few months ago. Now, rocketing short positions on Chinese stocks, but would you take this bet knowing the level of government intervention? And people joke about the plunge protection team in the US, but are China really going to let stocks crater? And are a lot of these investors, US funds that are trying to short stocks and make a fortune from when they go down? I just don't think that China are going to allow that to happen. And you're a very brave man or woman, investor, betting that Chinese stocks are going to go down when there can be simple intervention from the Chinese government. Now, more recently, they have actually decided to flood the markets with a lot of liquidity as well to try and prevent that. So we know that these wars continue here. China, the fiery address from President Xi talking about the US being a bully, and then Trump came back and said that it's all lies. So, you've got to shake your head a little bit and cringe here. Again, kneecapping a huge chip maker. It's always the company and the little guy that gets hurt with all these bans on exports and imports. Citing that it's actually been used, the intelligence with Chinese military. And that's the problem, that there's a lot of overlap. And corporate America, in a lot of ways, is actually quite tight and friendly, and they get a lot of their profits from China. And this is where, again, policy versus money can, who makes the rules at the end of the day with all the lobbying and that. This is where it's very interesting to watch where it all goes. TikTok's filed a new injunction against the White House. We know that they're trying to get rid of TikTok and have their own knockoff version. Tesla is also suing in the US Court of International Trade to try and block these tariffs from Trump. So, what an interesting time in history with these headlines that we're reading out. We've got the election around the corner as well. Now, in terms of all these companies like Tesla and Apple and I guess any that have just issued all this junk debt and investors have been so hungry for it, there's a new record being set, 330 billion of sales, because all the investors, they just want this yield. And the Fed basically told them, we're going to buy these, whether it's the ETFs or the actual junk bonds, we've got you back. And I did a video at the time, the day before they made that announcement, saying that sectors like US energy sector, they are going bust. This can be the next financial crisis because of the wave of collateralized loan obligations, just like collateralized debt obligations caused the GFC. These have all been packaged up. It's a house of cards. It'll collapse if there's no buyer. And that's when the Fed announced that they were going to start buying the next day. Now, the evidence that we got was that the Fed actually didn't end up buying that much, really. And it was more the market that was sort of front running this. Now, back in May, they actually stepped up because the market said, hold on, you haven't been buying in February and March, April since you told us you were going to. So they proved that they would act when needed. But since then, Powell's sent a very clear message. Now that markets have turned, we've started to see some defaults and cracking in that system. And there's been very, very few purchases from BlackRock and that program, the secondary market corporate credit facility. Bit of a mouthful, but this is the, program for the Fed to buy these types of bonds, and they haven't stepped up yet. And that is probably the main reason that I think markets are nervous and holding the Fed hostage again. Like every time in the past 20 years, markets are going to correct until the Fed come out and say they're going to print more money, or maybe when the government pull the trigger. But either way, those CLO prices are collapsing. So this is around $18, got down to around $14 here back in April. Had this bounce, unlike stocks, a lot of these bonds didn't get anywhere near the top here, near the all-time highs, because it's that junk category. And now it is rolling over quite sharply again. So that is the picture that we're painting. Investors are just fleeing all these different ETFs because the high yield bonds are racing their gains, but it's more that the Fed haven't pulled the trigger and have actually said that they're not game to. So this is echoes of the GFC, making all the same mistakes. The aid to households and businesses on paper that they've kind of said that it's there and that they've pledged that capital, but it's really just sitting in those banks' reserves and the banks aren't lending. Another example here, $33 billion in farm subsidies because of what happened in the fallout from the trade war, and China weren't able to meet those obligations. But if you look at who actually got that, once again, it was city slickers, as they're kind of joking about in this article here. So unlike food stamps and other welfare programs, it's not really controlled and limited by income and other things here. So not as many obstacles for people to just, milk that program. Like I just said before, there's been a lot of fraud now that's been exposed. American Airlines receives another $5.5 billion, just as they also getting rid of more staff. And we've seen Commerzbank over names Deutsche Bank, the new CEO. So this is one of the banks, European banks, that are all really struggling at the moment. They've got books and their holdings that are very fragile. They're exposed to things like Turkey, Italy, Greece, Argentinian bonds. It's just not as, well structured in terms of what they have and the reserves available from the ECB compared to the Fed and the swap lines. Things get very messy very quickly over there with a lot of those European banks, and that is now reflecting through in the charts. And they've still got negative interest rates. And as long as you've got that, it's almost like a constant drain on the bank in many ways. That's why other central bankers are nervous to go down that route. So Britain's coming commercial property slump. We've spoken about this in the US, but the Crown estates themselves have actually had to write down 17% of their value. I mean, you feel a little bit sorry for them, don't you? From their $13 billion property portfolio, they've had to write down $700 million of losses. So hopefully the Crown will be okay there. Lockdown 2.0 over in the UK, we can see that we haven't quite bounced back to that baseline there. A lot of people unhappy and rallying in London. Thousands are protesting another round of lockdowns. That civil unrest, people are kind of wising up to it and asking why. And, you can definitely understand the frustration in these different capital cities here, but it's another reason why we're continuing to see people shift from the cities to the suburbs. Crazy growth here, 46% year on year new home sales. They're soaring, so highest for over 10 years since the last financial crisis here. Single family homes that have sold, new single family houses for sale, going down. So people are scooping up anything on the market and moving out for a different way of life. So another repeat of the subprime problem, where we see all these mortgage delinquencies hitting record highs. The Fed are going to have to buy commercial mortgage-backed securities as well as these other mortgage-backed securities that they've packaged up. And I think they're kind of waiting for that. At the moment, they're playing cool and pretending it's all cool. But this is just, look under the surface. Articles like this. There's a new gig economy startup saying that they're the Uber for evictions. So download the app. Maybe if you've got a few mates that are bouncers or whatever, maybe in their spare time they're going to go and evict people from their homes because there's just so many people that need evicting. They're trying to find people to do it. It's not pretty here. Walmart are cutting workers' hours just after they increased that pay, remember? So, look, water finds its level. And as I said, it's all well and good to lift people's wages or make a law that says you've got to raise the minimum wage. But if the company's profits stay the same, something's got to go. And it's the CEOs aren't going to cut their own pay, okay? We live in a world where that is just never going to happen. But what we've also heard, if you look through the data and, even the talking to people and boots on the ground and people from Walmart, friends in the US are saying that it was very clear all the spending when people were getting these checks. And now that's kind of rolled off. Walmart and these sort of stores are just quiet. You can just tell. And that is now being reflected through in things like profit, earnings, and cutting the workers' hours. Jobless claims are back on the rise. This is unexpected, obviously, for the forecast from the commentators here, but a lot of people did see this coming, particularly as the stimulus boost that I just spoke about, it is fading. The stuff that people want to buy, that is going up in price, that hidden inflation, and the stuff that we don't really want is, or don't really need, I should say, is getting cheaper. Now, for the first time, the Fed are openly talking about doing these digital dollars. So remember, Fed coin, Fed app, straight to you. I've spoken about that so many times. It's looking like a reality. And this is a big deal because all these payment companies and this sort of shadow economy, shadow banking system, every week there's another story like this. Wirecard, that big fraud that got exposed, the auditors have now uncovered that, $1 billion loss. And it's almost like the entirety of their financial model was just all fraudulent. So on top of what we've just seen in terms of the FinCEN announcement, banks all around the world, $2 trillion, they're digging their own grave just at a time when governments and central banks want to launch their own currency. So the retail banking system is no longer being hunted by Bitcoin and crypto. It's being hunted by these digital currencies that the big boys want to issue. So hundreds of billions of dollars in unused aid could be reallocated. And this is what they're talking about here with these different programs that didn't get used. So small businesses that didn't come in and get those loans, the Fed have kind of pledged that it's there. They're saying, well, let's redirect that to these other programs to help out Main Street and help out the average guy while it's there. The Fed are pleading for this stimulus. Markets are starting to give up hope. Powell is talking about how, we really need this. It'll be dangerous. Other Fed commentators are coming out and speaking publicly. And I think, it's very clear now that they're trying to push these bills through, but whether or not that happens before the election is the big unknown. Not only that, the Fed have turned to BlackRock to help calm the markets. It's ETF business wins big. Obviously, they're making a heap of money. The Fed have already got them to buy those or help buy all the ETFs and the junk bonds. But the Fed are basically saying here, look, markets are increasing in volatility. We need your help to calm everything down. We know that Trump and that are a little bit hesitant to step in compared to what they otherwise would have been because government debt rose at 59% in Q2. Very similar to in Australia where they had their surplus and then all of a sudden they've got these huge deficits. And they're kind of nervous. They'd rather the RBA print money. But look what's happened now. People have pulled out of their retirement savings. That's the same in the US and Australia. The government are going to have to foot the bill either short term or long term. But it's become all about making the numbers look good in the short term. Here we can see buybacks. They have been a lot lower this year. But keep in mind that this is actually announced share buyback repurchases. So a lot fewer, if you remember the stat that I showed, a lot fewer have been announced. So the truth is the actual buybacks that have taken place are a lot higher than this figure. We know that retail traders have just been going nuts. This is E-Trade, TD Ameritrade, and Charles Schwab. So this doesn't actually have a look at Robinhood, which I'm sure is even higher again. But these are up, sixfold in terms of the number of trades that are taking place from retail. Massive issues that are now being caused. Things like this little Chinese penny stock. I think they had a little bit of an announcement about an electric vehicle, and the algorithms and the retail traders, when they hear these things and they just buy, and this stock pumps 4,000%, and then it collapses 2/3 back down when people realize, it's nothing more than a little bit of a headline. So it is nuts to think that it's retail traders and that thin volume that is actually moving the market now. It's all paper gains for the big funds, but if they actually try and sell, there's not the liquidity there. And last week, I think I mentioned that I was quite surprised that we did see a bit of a flow into equities, maybe a little bit of a buy the dip, but a lot of that, more than what went in, actually came out again this week. A huge number there, the amount of funds, and these are US domiciled funds that are going back out of stocks after they just went in last week. So maybe they were expecting positive news from the Fed this week, and they didn't get it, and they've sold those stocks. And in the margin positions, we've seen very similar, unprecedented reversal. So Nasdaq shorts have hit the second highest level ever, and that's just after we had those record longs, remember? So traders and investors and speculators, a lot of flip-flopping happening here. And this is why, because the Fed's balance sheet is so tightly correlated to the Nasdaq 100. And as soon as the Fed have made that outlook look like they're not going to print anymore and buy more, investors say no reason to be in these shares. Interactive brokers, they've hiked margin requirements by 35%. So all of a sudden, they're basically saying that we're expecting almost 35% more volatility. Instead of saying, hey, maybe you only need 20% margin to put on a position because stocks don't fall more than 20% before you're going to get your margin call. They've increased that by 35% because they're saying, hey, there's rocky times ahead. You need to find more capital. And when traders get told they need to find more capital, normally they've used all the money they've got. So what are they going to do? Well, they've got to free up 35% capital from somewhere. So they have to sell that. This is like a margin call in a crash. Similar things starting to unfold here from interactive brokers. I'm sure others will follow too. I've spoken about Biden's plan to increase the capital gains tax, and this could spark a big sell-off in stocks. So if you're sitting on huge gains and Biden's telling you that he's going to tax those more, as it looks more and more likely like he's going to get in, some investors are going to have to, or they're better off on paper to sell those, get that out of the way, and then even if they rebuy later. But you're starting to see all these ingredients that I'm talking about that can really cause some rocky times ahead. If you want to pause the screen, these are some scenarios talking about how investors see growth compared on the outcomes of what happens in the election, how it's affected things like the S&P 500 and bond yields and those types of things in past elections there. Fed's Evan is trying to set the record straight. So one of the things that was really confusing for people was this, wording that came out about the possibility of raising rates. And I just think that is not on the table whatsoever. So when he said that, we could raise rates, average 2% before that's sort of reached, blah, 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 people are saying, what? You're talking about raising rates before inflation gets going? The market's had a tantrum almost off the back of that, and the algorithms in particular. So he's come out and tried to set the record straight there. I don't think there's any danger of raising rates anytime soon. Now, the dollar has broken this long-term downtrend. I've done so many videos about this. You guys that follow Troy and Kyle know they've done a lot of work on TA and the bottoming pattern that might be in here, so I'm not going to talk about that too much. Other than to say that once again, we've got a huge position, and traders actually doubled down. So despite the dollar having this huge rally, futures traders sold more, and they've got this enormous short position now. It's the biggest in 9 years. So if the dollar actually continues higher, that is going to cause a massive short squeeze. So that is something you've got to be prepared for. If we do get a short squeeze, then that is going to really hurt, the Bitcoins, the golds as well. So look, be aware of that. Twin deficits, a fantastic article here talking about how not only has all the spending gone through the roof, but the US's trade deficit is getting wider and wider. And this is just a double hit for the dollar. Maybe that's why investors are betting on that. But again, markets can be very irrational short term. So if you're leveraged up and betting that something's going to go down, you can be part of that problem that gets squeezed, and then the market actually starts to fall. So that could be a really good trade opportunity, mixing our fundamentals and our TA. I will cover that in more detail in the group. But look, ex-Deutsche Bank gold traders found guilty. Another spoofing trial here. JP Morgan to pay a record $1 billion settlement over precious metals and treasury manipulation. All those conspiracy theories and tinfoil hatters. It just seems that every month now we have another one of these come true. And once again, the big banks have made a fortune off investors coming into these markets. And we saw that physical gold, real gold, the spread, the demand for different warehouses. So obviously they get to charge fees for all of that. And if we see this chart here for their net revenues has gone, more than doubling in 2020. So happy days for them. They get to make money no matter what really there. Eric Sprott, billionaire, loves the precious metals. He bought a huge amount, $1 million of Chesapeake gold. So just like Warren Buffett, more and more of these guys are taking very big positions. And I've been talking about the pullback and what I'm planning on doing. If you want to have my deep dive and my thoughts on gold and silver, I did a live stream on Friday night. So highly recommend you check that out. A few nostalgia stories there from my days posting on Hot Copper thread. Before Nuggets News, when it was World News, I had a bit of a Facebook group talking about some of the stocks, some of the mistakes I made, some of the gold stocks in Australia that have done 100x as well. So that was really enjoyable. Thanks to everyone that tuned in on Friday night. Now, I know a lot of people have been asking if eToro are going to list more gold stocks. I want to let you know they have listed things like Barrick Gold that Warren Buffett purchased. Newmont, I think, is the other one. So the big, large cap gold stocks, all the gold ETFs, the gold miner ETFs, they're all zero fee on eToro. And also things like Microsoft. I've got an article coming up here. Be careful. I do like the fact that they don't have all those garbage, triple leveraged, inverse gold and silver ETFs as well. That's where the Robinhood traders, the noobs, have got themselves in a lot of trouble in the US. But that link down below, guys, is still running if you want that $100 free Bitcoin, if you plan on doing a bit of US trading. So Microsoft's acquisition of Bethesda. If you don't know Bethesda, they are the creators of Fallout, an awesome video game for the gamers of you out there. Could be a massive disruption in the video game industry. What we're seeing once again is that the big boys are acquiring all these smaller companies and making a play for the gaming space, because that my thesis is playing out. This is a huge sector, not just in the crypto world, but in the wider tech world and the real world. Now, I've got a lot of gaming news items to get through in the crypto space, but I did just want to mention this one here as well, because decentralization of the gaming space for the small guy that wants to make a game and not have to work for Microsoft, it's really important that they do have an option there. All right, so quick drink and we're into the crypto news. Now, as I mentioned, all the banks took an absolute beating this week after the FinCEN leak showed that they've been laundering $2 trillion of suspicious transactions. OneCoin, that huge scam that went on for ages, so BNY Mellon have aided $4 billion of fraud. The stuff that's going to come out of this is crazy. And, Andreas Antonopoulos had a good tweet about the fact that this is a good excuse for them to crack down on the banks and crypto and take control of money like they've been wanting to with those stablecoins. And I've been saying it for so long, it is a battleground, the digital currency space for global finance, from the governments, the banks, the central banks, and the crypto space. We did have a rare positive report on China's TV station this week about how it's the best performing asset class. Ant Group have launched their cross-border payments platform for small and medium-sized enterprises. So the competition in that space is nuts. PayPal integrations with their fiat crypto, Gap for Bitflyer Europe users. The European Central Bank is concerned about runs on stablecoins. I had to have a laugh at this because they're talking about doing their own and how it's not going to be a substitute for cash, a digital euro. The US only came out this week and spoke about how the banks must hold one-to-one reserves for things like Tether and USDC. And you think about all these other assets out there and how fractional reserve banking works, and you just have to laugh when they come out and say things like it's the stable coins that pose a risk to the banking system if people try and withdraw them. Don't you think it's the fractional reserved assets that are the risk and the cause of bank runs throughout history? Either way, maybe you guys know what Christine Lagarde's thinking. Two new bills from Congress looking into listing coins as commodities, which would be a good move, and also seeking a bit of a national framework for the exchanges, because in the US at the moment, it's kind of a state-by-state thing. Most Americans surveyed are actually against a digital dollar. I think all those US investors are going to be quite happy with their Bitcoin and crypto rather than having to use Fed coin or Trump coin or whatever it ends up being. But this was a fun debate that I got to sit through, the majority of it between Bitlord and Sam talking about XRP. So look, a lot of you said that there was a lot of ranting there, but I did want to let you know that Sam and I are having a, I guess, more mature sit-down debate about everything that's happening in that space. So look forward to that one. Stablecoins have grown from $1 billion to $20 billion in the past 18 months. It is going to go to $100 billion in the next 12 months, in my opinion. More and more of these companies are coming out, debuting their own coins that offer interest, digital dollars of sorts. Fintech giant Plaid has a passion for DeFi. More and more people are coming for this space. So whether it's exchanges like Coinbase that they're working with or these more centralized companies, they're trying to really open up the world of banking and already integrating with Dharma, the app that's paying your gas fees at the moment, and others like Teller Finance as well. Now, I want to talk about what has been happening in the DeFi space and a bit of gaming. So you can kind of ignore this until the funds start making money. And now we're getting these reports about how much the big funds have made from the DeFi craze. It makes sense that these investors are going to demand exposure. Now, obviously, we've been very early on and you guys have done extremely well from the DeFi coins that have done, 10, 20, 100x in returns. And we're always doing our best to try and keep you ahead of the herd. So a few months ago, I said that I think gaming and NFTs, that space is the next big thing. And we've really seen that blossom. So I wanted to let you know that a little bit of a sneak peek here. We'll be going hard after that space. You will be seeing a monthly gaming update with our friend DLC Blogger, who I think is probably one of the most informed in the space. He's joined our group. He's doing daily updates in there. I won't give away too much other than to say I'm very excited to be able to say that I'm confident that we are going to be ahead of the curve. And we saw that this week. I kind of joked about what are we going to call these NFT tokenomics, because there's so many interesting things you can do with these non-fungible tokens compared to just a crypto coin as well. Now, just this week, we had more updates from Red Fox Labs. Make sure you subscribe to their YouTube channel as well. Fantastic news there. I know they're doing some interesting things with their tokenomics. We saw big companies like Atari. They're actually making a move back to the console, and that is going to include some of these blockchain games. So it's just all those pieces are falling together at the right time. And I think one of the things that I specifically said and did a detailed write-up for our members was the way that you get these 100x returns and you know that you're early is when you plant seeds in good projects like we have done over the last few months when no one's interested. And then you see a little bit of interest from the people that are passionate and that are early in that sector and that have been there for a while. And then you see the good analysts cover it. So people like Missouri. Now this week they have started to cover and do these reports on the NFT space. And we know that the big VC funds read the research of Missouri and Delphi Digital. So Delphi have bought $160,000 of digital pet NFTs on Thursday. This was from Axie Infinity. And once again, this was one of my projects that I covered for you as the best projects in crypto and gaming. And, I'm so excited to see this happening. It's unfolding again perfectly, and we're on the way already. With some of the projects we've invested in are already up 30x, and we're not even anywhere near it. So I do think this is where we are going to find the next wave of projects. I've already got a few of those in my portfolio, guys, if you're in the group. But people like Shamath, that, he wasn't up to date with DeFi or, let alone NFTs, and very smart people like this that have got huge followings, as well as the funds, as well as the researchers. They're now starting to say that the typical 60-40 portfolio of stocks and bonds, go to the US dollar when times are tough, none of that's working anymore. You've got to diversify with things like crypto, artwork, baseball cards. Most people have 0 to 5% in alts. This allocation will probably change if bonds remain at 0. So, hey, I just, look, I'm a little bit stuck for words. Now, one thing I did want to touch on was guys like Pomp, and I'm not picking on Pomp. I would love nothing more than to get on his channel or to have him on and flesh this out with why I disagree with him, because so often he pretends to be a maximalist, but then there's things that he's invested in or projects that he likes, or sometimes they're his sponsors, and he tends to favor those. And he just says that, he's not bullish on ETH, but he has these crypto startups. And then he says that all Bitcoin is coming to, all DeFi is going to be on Bitcoin. And it's just not. He talks about how he's so bullish on the gaming sector, and, the majority of it is happening on ETH and other platforms. He said this week that he's bullish on NFTs and he's made all these investments. But again, he just says that he's not bullish on ETH. And STOs, look at what's happening in terms of security tokens and bonds, real estate. This is all now happening on ETH to these standards. He's saying that the world is going to be tokenized. Well, where is 90+% of all the tokenization happening? It's on ETH. So look, I think it's a massive contradiction, and it's hypocritical to come out and say things like this, but then just keep pretending you're a maximalist and that it's all going to happen on Bitcoin. But again, if I'm wrong, you guys let me know in the comments below. But the reason it frustrates me is that people like Michael, who's the CEO of MicroStrategy, said that, he learnt from Pomp. And I feel the need, those people do, like Pomp, fill the gap for the retail investor, and they talk in a way that's easy to understand and whatnot. But I almost feel like it's doing them a disservice not to talk about all the other things that's happening in the space. And he's come out and basically said that, look, all these other coins, they're not real. They're not the same. So Bitcoin's real dominance is, up over 90%. And this doesn't make sense at all, this tweet, if you think about what coins are in the top 10 or top 100. So yeah, misinformation. And that is, I guess, what frustrates me, as well as people like Pete McCormack, who I've openly offered to, same as Pomp. He DMs me and says, hey, I'll take you up on that offer. And then I say, well, okay, let's organize it when, and never writes back to me. And then they get on Twitter and they pick on NFTs and say, I screenshotted your NFT. Now I've got it. And it's, it's just rubbish. It's so immature. I can't wait to our first episode where we can answer all your questions about this. And Maddie did a detailed thread about why, just screenshotting something. It's like taking a photo of the Mona Lisa or screenshotting the Mona Lisa and saying that you own it and trying to sell it or trying to hang that up in your house. It's just, it's the digital ownership and the rights that come from that. It's not just the, the image itself. Now, marketplaces are really taking off at the moment. COGs have been on fire at the moment. I think if you bought your COGs, they're trading for 5 or 6 times more for the packs than when they were launched. So that Wax marketplace is taking off. They've got a new tokenomics that was meant to be out last week that should be out very soon, I'm told. So keep an eye out for that. And Open Bazaar, I'd hate to see this one go under. So I do hope they get some funding. So they were just too early. They've been out for a number of years now. Right place, just the wrong time. Keep an eye on the good projects. So during the dips, we've seen projects like Engine, the top 100 non-exchange holders have been accumulating over the past 6 weeks. They're the metrics you want to see. Matic, I've mentioned that I think they're going to be more active in the gaming space. 125,000 transactions on the mainnet in a single day. So it's just awesome to see some of these projects starting to actually get real use and traction. Litecoin have actually seen a lot of action from the game that they launched on their chain. And I wanted to talk about this tweet from Arthur, who has spoken about the DeFi and the bubble and how he thinks that there's a kind of a correction coming. Now, I'll let you read through that at your own time. But I actually think the timeline is going to be a lot quicker than that. And I think the bubble is yield farming and all these vegetable named coins. Now, if you have a look at CoinGecko and take advantage of their, the DeFi and the farm sections they've got to see what's going on in that space. But if you have a look at the top 10 here, look at some of these coins that I would argue have very little intrinsic value or use just yet. EOS and Tron even. Now, when you look at and consider the billions of dollars that's locked up on some of these DeFi projects and the potential in some of the NFTs and gaming space, I would argue that they deserve to have a lot more of a value. So yes, there are segments and money that's being thrown around at some of these vegetable named coins that are overvalued, but look, there's a lot of paper wealth in this space that I think can flow from one place to another. So I think that there's definitely areas that have turned corrupt and nasty and that you don't want to see. We saw plenty of examples this week after that meme coin that was a bit of a joke. It dropped. All of a sudden, the coins that were dropped for those individuals were worth $600,000 a month later. Whether or not these few guys that got involved here got a little bit jealous and started this coin called Fuel as a joke, and before you know it, they're talking about pump and dumping it. And some of these guys are guys that I would not have thought this was going to come from. I know Anthony was really in the spotlight because he said jokingly, we need someone to dump on. Now, even jokingly, I think obviously that is not something that I wanted to see him say. And he's done his apologies, and we'll let that play out. I am going to do the next Ethereum update myself and just let the dust settle a little bit there, because we don't want things like that associated with our brand, even though I do think Anthony was probably joking, but it is not what you want to see, not a good look. But, I won't get into that today. But look, the other thing we saw that was disappointing this week was a big hack from KuCoin. A lot of red flags there. Just another case of not your keys, not your coins, unfortunately. I hope none of you were hit too bad. They have said that they're going to repay all affected users. But how many DeFi projects are in a similar position where they still have their keys and they're not decentralized yet? And it's a scale. It starts off more centralized, and a lot of projects have done the right thing and tried to get more centralized over time. But what I did want to drill into here was another disappointing outcome. So, look, TrustSwap and Jeff, who is what I consider a friend of mine. You guys know I did pass up being an advisor on this project. I won't go into that too much because I might get Jeff on and really flesh that out. But one of the things that they advertised here was giving the community peace of mind that the team's tokens are locked up, invested using these TrustSwap, these locks, the audited smart lock technology. And I think what they're saying here is that, the team's tokens were locked still, so that kind of acted as the way that it was meant to, but the team actually exit scammed and took all the liquidity. And look, I think that's all well and good, but if you're going to say that you can't prevent it, that's not what your system does, I think you need to change the wording, because all over their website, it gives the impression that, no risk that someone would dump on you, or giving investors confidence the team is in it for the long haul. These are literally things that you can't advertise if the team are going to do the rug pull and dump on you. And then, obviously none of that is true in that situation. So look, I don't wish any project bad luck or, wish them harm or whatever, but I just really, hopefully this comes to a good resolution, because I think you guys understand the point of view where I'm going with all that. Crypto.com, there's been a lot of red flags this year with this company, and this week they've been caught using the copying or whatever notes are on your clipboard when the app starts up. So look, just be cautious there. I'm not sure if there's an explanation for this, but a few users have had their funds drained. We did see Flamingo Finance. They were the first, DeFi on Neo. It was trading at, I think it was trading at $200 or even $600 I saw before it launched. And that actually, if it was at $600, that made it number 2 by market cap. And it's just, a clone, another copycat project. And remember when everyone was excited about the first ICO on Neo? And look, now that's down 96, 99%, whatever it is. And look, maybe Flamingo is a great project. I'm not sure. But I'm always cautious when we get a late cycle. There's projects that are pivoting to DeFi, coming out on these other chains. Look, I think there's better places to park your funds at the moment with your hard-earned capital. There are good projects on other chains. Look, this O-score, I do think that Ontology have something that is interesting here. Sovereign wealth credit evaluation, Ontology ID system, all part of that decentralized web idea. I'm more bullish on decentralized web and gaming and NFTs than I am on copycat DeFi projects. Siacoin, decentralized storage, raising some more money, rebranding there. One that I do like. Polkadot, I think, has got so much potential here. They're integrating oracles at the actual protocol level rather than relying on an external provider like Chainlink. RockX have launched a $20 million investment program to help build out that Polkadot ecosystem to support projects, which is good news. And Avalanche, it has gone live. They're helping to scale DeFi, as he has said here. So, look, a lot of projects. Near is another one. A lot of them now are talking about how they want to help scale Ethereum and bring dApps over, which is very cool. And it should be no surprise to you. Matt, who's head of research, has been all over this stuff. So this is one of his posts from back in May, talking about all the different blockchains. Solana, Cardano, Elrond's on fire lately. Flow, Ava, Nia. Well done, Matt. Once again, very ahead of the curve with your research. All right, so quick drink and we're on the home stretch. Kava is another one that's looking to bring multi-chain and yield farming to Bitcoin and XRP. We've got Secret that have announced their token swap that's going to be supported by Binance. So they've got this vision for universal finance and integrating all these different chains, having programmable privacy, secret tokens, SNP 20 standards, so secret ERC20 tokens, secret bridges between chains. I don't think it's the last you've heard of these guys. You guys heard the interview I did with Tor the other day. Really exciting stuff. More chains coming over. So Loki bringing out their ERC20 version. So wrapped Loki. It's been the explosion this year, hasn't it? Integrations and people wrapping and going on each other's chains. More good news from IOTA. This is phase 2 this week. They continue to, bounce back after they were shut down. Hedera Hashgraph. So this was an announcement we covered a little while ago, but it is official. So they've launched this traceability program, this platform called Entrust. Good news for Hashgraph and good to see it happening in Australia. Ocean Protocol and Balancer wants to become the Uniswap of data. A couple of, again, good projects that I know a lot of you are fans of. A little one here that I want to mention, Dune Analytics. I love hearing this story of just two guys that have raised $2 million that were passionate about crypto analytics. So well done to those guys there. This is a little project called Mask that are bringing the future of the internet to, what they're basically doing here is embedding in things like Twitter. So you install an add-on and you'll be able to hover over the little hashtag. So when you see things like, the $ of Bitcoin, you'll be able to hover over that and make a sale with, say, Uniswap, for example, with one click. So that is really, really cool stuff there. The best projects, they are going to continue to push forward. The Graph is a very exciting protocol that fetches information from blockchains that have done a raise recently, and they've come out and said that, hey, we're really confident that the bubble hasn't burst for the best projects. And once again, we see that the top players in the space are just every week pushing forward. So Aave, they've launched their governance. They've made the switch over to the Aave token from the Lend token. MStable have launched their version 1 of staking. We saw Loopring with their liquidity mining. And look, every week these guys seem to have got more and more pairs on their decentralized exchange and their DEX that they really want to scale up. Curve is another one that's kicked off these dividend payments today. That is the one that we covered in detail in our research this week if you're interested. We see wallet holders accumulating, Ren, Band, Link, all these popular coins at the moment. So that is good news when we've had this sell-off. Technically Chainlink hits these levels and then we get a nice bounce as well in the chart when the fundamentals are telling us that it should be heading in the right direction as well. So we love it when those all line up. Teams have been all over fixing these bugs lately. Yearn Finance, Wi-Fi, I think they are still a leader in this space. Andre is talking about how to make decentralized derivatives and exchanges, and what he's basically saying in this tweet is that no matter what model he works on, he keeps coming back to this idea of having the funds pooled, and that is exactly what Synthetics built and the way that Kane went about it years ago. So basically saying that, yeah, they're onto something. And this week we got the news that Synthetics have launched version 2. So this is their scaled platform. So all the big projects are very, very close or already launching the first versions of their scaled platform. So think about being able to use a DEX, something like XDAI that have recently come out with HoneySwap. So this is very much like Uniswap here, powered by HoneySwap, which is X-Chain. And this is scaled, so no more $50 gas fees, one click, bang. Now that is going to happen to all projects eventually, but we're seeing it now, the first couple that have made that scaling happen, so awesome. TBTC is back up and running. That's another version of Bitcoin you can put on Ethereum. A little project called Opium team that are doing these credit default swaps and protection for wrapped Bitcoin, which is just awesome to see the derivative space building out. And this is liquidity. What's the full name of this project here, guys? So liquidity, these guys have built a bridge. So it's like a one-click Uniswap to go from Ethereum to Bitcoin up in a little extension. So very, very easy and fast to do. And I think that's one that's going to be really, really popular. Another bridge. So awesome stuff there. Spencer Noon's talking about all these hodlers, and every time we're seeing these days with huge fees, imagine if everyone got a cut of all that. And effectively, that is what is going to happen once we've got this new Ethereum improvement proposal that burns the fees. So when you're complaining that there's heaps of fees, well, you can think about it as always reducing the supply, and that is actually making your ETH worth more. So I guess it's a good thing. The top ETH holders by the whales that are not the exchanges, they're now at the highest levels since 2016. So that should give you a lot of confidence that the ETH whales have been aggressively buying these dips recently. We've got a Bitcoin ETF finally, but it is in Brazil. Commissioner Hester Peirce has said that she wants the SEC to finally get one across the line. There might be one in every country apart from the US by the time they get round to it. But look, more and more of these good news items and data and indicators. Cambridge came out with another study saying that the number of crypto users has increased from 35 million in 2018 to 100 million now. So it's tripled in 2 years since crypto winter. So, that's awesome. I tweeted the other day about how these pensions kind of indirectly hold Bitcoin now because of MicroStrategy, and we actually got the news that it's official and someone worked out how much that the sovereign wealth funds hold, and they do hold 600 Bitcoin just from holding the MicroStrategy company's shares. This was big news coming from Mike McGlone. So he's a senior commodity strategist for Bloomberg, talking about Bitcoin's quantitative tightening in the halving versus QE. So look, more and more of these mainstream commentators with big followings writing on stuff like Bloomberg, it just gets Bitcoin etched in the mainstream. And in terms of Bitcoin being unstoppable, well, it doesn't even matter if they block the internet now. We've got more and more of these satellites being launched by companies like Blockstream, where you can get your information and broadcast your transaction to a node that's up in space. So it doesn't matter if you've got no internet. And we've also got Bitfinex here that are announcing that they've increased the loan capacity by partnering up with Wumbo channels. So these are very big Lightning channels. I think we're talking, was it hundreds of Bitcoin? Either way, the capacity is being increased. Good news for the Lightning network there. If we have a look at the chart, so Bitcoin has had a bit of a down day today. We know that we're in this downtrend. That is what we're looking to break. The week is into week 5 or 6 now of correction since we peaked out and just made that higher high. But all in all, I think you could probably argue that it's still reasonably healthy here. So we've had a bit of a correction. When you put this on the log chart, it's almost the perfect retest and touch of this trend line before we can push off higher again. Look, I think that, as I said the other night, it's a very similar looking chart for whether it's gold, that it's either finished its correction or it's got one more leg down, depending on if the US dollar has finished its correction and it's about to keep trending higher, or if this is its bounce and it's hit its resistance level and now it is going to roll over. If that happens, I think everything takes off again. And I think that is going to be triggered by whether or not we get the stimulus. So it all comes down to that stimulus. If you didn't watch that video the other night, check it out. Otherwise, guys, smash that like button, leave a funny comment for me down below. Head over to nuggetsnews.com.au to get all our free resources and join our group if you haven't already. Otherwise, I will talk to you again next week, and thanks for tuning in. Cheers.